네, 미국 시카고 선물거래소와 월가 현재 동향을 생생하게 전해드리는 월가 트레이더 버니의 미국 주식 시간입니다. 미국 시카고에서 재무 컨설턴트로 계신 버니 씨와 화상 연결을 해서 미국 시장의 생생한 이야기를 전달해 드리는 시간인데 이야기 나눠보도록 하겠습니다. 네, 현재 글로벌 증시는 러시아와 우크라이나 전쟁으로 인해서 변동성 장세에서 빠져나오고 있지 못하고 있는 모습인데요. 이외에 최근에 시장에 영향을 미치는 변동성의 원인이 무엇인가요?
Well, we know that when the market goes down, volatility goes higher. And so we are cognizant of that fact. What we want to identify is where did those periods of high volatility, where did those periods tell us that this could be an attractive place to add to equity purchases? So what I've done is if we take a look at the VIX, okay, the VIX is a measure and it charts every day and you could actually trade the VIX. The VIX is a measure of the stock market volatility 30 days out, okay? So right now, we were about 32% as of Wednesday of this past week. We were about 32% volatility. And that is coming from down around 15% in the middle of December, even when stocks were starting to go down. So now what we're seeing is we're seeing big ranges intraday during the day and also big up and down closes, mostly down, obviously. And that's been reflected in the fact that the market's very volatile, and the VIX is indicating that. So what we know, if we do studies and we go back and we look over time, let's take a look at a 5-day average of volatility right now, and that number is very close to 30% as of Wednesday. As of now, it's even higher than that. So where is it that we know that there's a good deal of volatility and that maybe that's a place where the market can start to really move up from? So what we do is if we look over a 14-day period, okay, once volatility exceeds 30%, what happens to the market 1 year later? That's the question we want to ask the market. And what we really found is that 33% is a great number, that once we get to a 33% volatility averaged over 14 days, and by the end of next week, that'll be about 14 days, that's been a indicator or coincidental occurrence with stock market positive performance out 200 and out 500 days. So let's look at the next chart. And what we can see, we're going to look at this on a 200-day basis first. And what we've done is we've taken the VIX levels, okay, and broken them down, okay, by bands. So 20 to 25, 25 to 30, 30 to 35, okay? And then we've gone across and identified not only the market sectors, but the overall S&P 500 return. Now, my contention is that greater than 30%, okay, where is the market 200 trading days out? And what we can see is the stock market does better. Obviously, the higher the amount of volatility, the lower the market's going to be, and the higher the returns 200 days out. But we can see right here in the technology sector, which has been hit the most, is that once we get to that 30% or more, that's when we can look out 200 days and find good returns. So average is 16% out 200 days. The same thing with consumer discretionary, the same thing with financials, and the same thing basically across the board. Energy, not so much. And healthcare is good. So what we can see is if we can average, if the market does average over 30% over a 14-day period, returns out 200 days are positive. Let's go to the next chart. Look at the same thing out 500 days, okay? And this is over the last 23 years. So we can now see these returns are even more significant 500 days out. Same condition that happened, instead of 200 days out, 500 days out. And now we can see is instead of 15, 16%, we're up to 28 to 40. We're up solid numbers across the board here. So if we can average those kinds of volatilities, what we've seen in the past is that the market 200 and 500 days out has a good rally potential, and we've experienced great stock market returns from that period. So it could average more than 30% for more than 14 days out. But once we hit 30% for 14 days, these are the numbers that have been reflected. Let's look at the next table. So just like we talked about, 14-day average, averaging more than 30%, okay, that would suggest that the market currently is attractively valued. And what we've seen so far at the end of this week is that there are people coming in to accumulate stock, just like we saw Bill Ackerman and Pershing Square buy $1.2 billion worth of Netflix stocks. Other people are starting to buy now. So at these stages in the game, we're now at levels that are really attractive. Remember, we looked at the advanced decline line and how significantly down that was, down much greater than we saw in 2008. We also looked at new highs, new lows, and new highs, new lows were matching where we were in March of 2020. Now, I'm not saying that this is the bottom of the market, but the market goes from down to up to down to up. And if you wanted to say where we think the market's going to be out 200, 500 days, out 1 year, you have to say that given where we are now, that we would be higher. But it's all still, just like the stock market does, it doesn't move in the easy direction. Everything's a little bit of a challenge. But conditions warrant not selling here as opposed to conditions warrant buying here. Let's look at the next clip. Now, we've talked about before, the stocks that are getting hurt now are technology stocks. And we've talked about the reasons why. The anticipation that higher interest rates down the road are going to have more of a compounding effect because technology stocks earnings grow faster than other stocks. And we love stocks that find revenues, excess growth, and earnings excess growth. So when we look at where that, and we know that the growth stocks have outperformed value stocks over the last 20 years by a substantial amount, okay? But where is that premium of growth stocks? So if we take the S&P growth index and divide it by the S&P 500 index itself, okay, what we see right here is a chart that basically is on an upslope until lately. And then if we take the same thing and we take the value stock index and divide it by the S&P 500, and we can see that that stock didn't quite do as well, but now lately it's doing better. So what we see is that the premium that we had from the beginning of COVID all the way to here, okay, to the end of sometime in the fourth quarter of last year, has gone away. So our growth stocks are priced at the same levels that we were in 2020, early 2020. So when you're buying prices and you're buying returns from growth stocks, if you buy the right growth stocks, you're not paying a premium relative to where you were at the bottom of the market in March of 2020.
네, 지금까지 미국 시카고에 계신 버니 씨와 함께 이야기를 나눠봤습니다. 버니의 미국 주식은 서울경제TV 유튜브에서도 확인해 보실 수 있고요. 노란톡도 열어두고 있는데 문자 샵 0082번으로 버니의 미국 주식 전송해 주시면 되겠습니다.